Hello and welcome to your morning market hit for Wednesday the 18th of May. What matters today for traders? Well, it was another day of strength in global equity markets, particularly in the US. There was a real risk-on feel to yesterday's trading session. The S&P closed up 2%, but it was some of the small caps, the tech sectors, and particularly the Philly stocks, which closed up over 5% on the day, that were the big movers. Amazon, Apple, Microsoft, Google, Tesla, as well as key chip makers Nvidia and AMD led the charge higher. Indeed, there was only one source of weakness on the day, and that was Walmart. With profits missing expectations and a cut in its earnings outlook, the stock fell 11.4% on the day. Walmart aside though, markets were clearly in a risk-on mood yesterday and are now notably off their lows. So what does that mean for traders? Is it time to get skin back in the game? Are we now back at the races? This is something we discuss at length in today's Daily Rag publication. If you'd like a copy, there's a link to a 7-day trial in the description below. It's hassle-free, requires no card details, and doesn't require cancellation after your free week. With market volatility elevated and a real range of opinions out there, there's no better time to take your free trial. At the lows last week, we had increasing levels of fear building across the financial landscape. We had a flight to the safe haven dollar, we had a widening of European bond spreads, and we had big sell-offs in some of the riskiest junk bonds in the US. We also had high levels of fear built into portfolios, high levels of downside put protection in place, and increased implied volatility as measured by the VIX. With the move higher in equities this week, those measures of fear in portfolios are starting to dissipate. Put to call measures are no longer on buy, while the VIX has come off sharply and starting to edge towards sell signals on some models. The wider gauges of fear remain though. Junk bond yields remain high and European periphery spreads are elevated. All of this creates a nervous trading environment. And while the chances of this relief rally continuing for another few trading sessions is reasonably good, the risk to remaining long is clearly elevated at this juncture. That's all from me. Do remember to like and subscribe to get notifications of all of our videos coming out. Thanks for listening. Have a great day.